Hey everybody, welcome to Mortgage Today for Monday, July 29th, 2024, and oh, what a day it was. UMBS are up 4 basis points in early trading. Small number, but at least it was green. Stocks were up 24 points. The week ahead will be dominated by the FOMC meeting on Tuesday and Wednesday. Markets expect the Fed to maintain rates at current levels, but will be looking for a signal that a rate cut is coming at the September meeting. We will also get decisions from Bank of Japan and Bank of England this week. Aside from the FOMC decision, we will have a lot of data this week with house prices, ISM data, and jobs report on Friday, as well as ADP midweek. The Wall Street Journal's Nick Timmeros, aka Nicky Leaks, is one of the journalists closest to Fed thinking. He doesn't see a rate cut at the FOMC meeting this week, but thinks that the Fed will start cutting in September. Aside from the 2005 to 2006 tightening, this is the longest period of tightening in modern history. This is the longest period of tightening in modern history. The spike in inflation during the beginning of the year seems to be a blip, and the Fed is getting worried that it might ruin its soft landing. Rates are expected to remain unchanged at this meeting. However, policy guidance and commentary post-meeting will begin to have more clues to the Fed's approach on the potential use of a rate cut. We set the rate when inflation was over 4%, and inflation is now, let's call it 2.5%. That implies we have tightened a lot since we've been holding this rate, according to Chicago Fed President Austan Goolsbee in an interview over the weekend. There have been a few occasions in the past few years where the Treasury quarterly refunding announcement sent shockwaves through the bond market. Today turned out to not be one of them. Treasury showed traders the light at the end of the issuance tunnel late last year, part of the reason for the big rally in November, and now we're simply seeing the general fruition of those predictions. In fact, the Q3 borrowing summary was more than $100 billion lower than last time. Markets don't have a perfect way to predict how these estimates will change quarter to quarter, but trading reaction tells us it was only a small surprise, but a pleasant one. UMBS closed the day up 3 basis points at 101.07. So at 101.07, that is putting us right below this Fibonacci line at 100.91 with two other ones above it. All of the trending data has been well below this. We have the 25-day moving average, which is kind of coming up to meet current things, but pretty much we're relying on Fibonacci's as our technical data. So hopefully we get some bad news to push us above that.